Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. Welcome back to the show, Tim.
Jim, as always, thanks for having me.
Tim, earlier in the week, we saw the major stock markets take some dips down. Now, again, we're being told they're going into record territory. But it's not just the stock markets. Real estate, Bitcoin, sugar, lumber, all of these things going to new record highs. Everybody's calling it the bubble of everything. Is it the bubble of everything, Tim?
Well, it's been the bubble of everything, and it just keeps going on and on and on. It's like I was talking to a friend of mine in Belgium today, and he said everything was hunky-dory. I hadn't heard that word in a long time, though, that phrase. And I think, everybody thinks everything is hunky-dory. And you're right, it is the bubble of everything. And equities and lumber, that's just one aspect of it. I was at a business where they sell, a friend of mine, and where they sell, high-end jewelry, collectible watches and that sort of thing. And he was telling me what's going on in that market, and it's just insane. I mean, they don't even have any inventory on the premises and in the counter. He said the stuff comes in and is sold before it comes in. And it's just, and he was telling me about how the prices have gone just through the roof, and he was giving me examples. It's nuts. And, a little hobby that I had gotten into years ago, or a few years ago now, was, the vintage stereo equipment. And I'm glad I got what I got when I got it, because, it's a bubble there. It's everywhere you turn. Everything is just the prices has gone insane. And, we're seeing it with lumber. When I was talking to my friend today in Belgium, he said that he had read, or somebody told him or something, said people were talking about peak lumber. Remember the talk about peak oil back in 2008? Now they're talking about peak lumber. And, the talk is, of course, that this is all inflationary, and obviously for the time being, yes, it is. I've said that I think that all of these asset prices are going to peak in close proximity, and that they're all going to come crashing down together. And this is all kind of a odd. I think that they have pushed and pushed and pushed and pushed and kept this thing together and kept it together. And, I think that we're seeing some cracks now when you look at Bitcoin and a few other things. And, I think ultimately these price increases that we're seeing in like lumber, for example, and building materials, it's going to be a wet blanket on the economy, and it's just too high of a burden for the so-called recovering economy to bear, and I think it's actually detrimental.
Well, President Trump put a 20% tariff on Canadian softwood. It was lowered to 9%, but that 9% tariff is still being charged on your lumber, and I would imagine your biggest supplier of lumber outside of southern states would be Canada.
Yeah, I don't know about the logistics of lumber, but, I did the math, and we're up from from, I think it was April, wherever the low was, I think it was March or April of 2020, and we're up 580%. I mean, it's the biggest increase ever. So it's insane what we're seeing going on here with all of these prices, and I'm telling you, it's unsustainable. The problem when you get into an environment like this is, it can go on much longer than you think and push much higher than you think. And that's why I've said all along that, ultimately it's structure that is key, because ultimately you have to have that structure in place. But, you get into this environment and it becomes, it doesn't take long and people fall into the mindset that it's a new norm and that, lumber prices are always going to go up. And as an example, there's a long-term average price of lumber that we were below the going back to 1970. I forget how I calculated. I think going back to 1976 or 1978, the average price of lumber Well, we were below that average price in 2015. We were below that average price in 2020, and we will return. It's just a mathematical function, and that what it shows is just how extreme the environment that we are in and how dangerous the environment is. And I know we've been saying that, but at the same time, the way we got here is, because of all the efforts to keep it going, and it's just made it worse and worse and worse and worse and worse.
Well, now there's talk of easing up on all this stimulus and for governments to stop buying treasury bills by the billions. And does that have people nervous, or are they still going to just keep throwing money into all these different products and stock market?
I think people are going to throw money. I don't think people are nervous. I think they think everything is hunky-dory. I think everybody thinks that everything is on recovery. And I don't think they recognize the dangers of the environment. It's gone on so long that there's just absolutely no fear. There's no sense of reality. The disconnect is, there's never been anything like this. And I think correspondingly when it does, finally set up and things begin to come unraveled, I think people are going to be so blindsided. They're not going to recognize it, for one, because, hey, everybody knows to buy the dip. And then I think they're going to find themselves so upside down once it really happens. It's going to be devastating. It's really scary, the environment that we're in, when you recognize it for what it is.
How do you buy the dip when that dip becomes a plunge?
Well, just like everybody, when you look at the chart, the dip, the plunge that we saw in 2020 was just a dip. So, you get to, there's nothing goes straight down, but so there will be some sort of a pause, and you get a pause and people buy, and you get a pause and people buy, and you get a pause and people buy, and at some point the environment's going to change, and it's just going to keep going. And, I have some charts that I'm following in the research letters, and like I said, I know we need structure. We have to have that structure. But then in monitoring the vital signs, if you will, of the underlying environment, there are charts and things that I'm following, and some of that stuff is just, it's starting to show some cracks. But again, we need structure. And what I'm trying to say is that when the vital signs and some structure comes together, we'll know that we're in a pretty dangerous position. But without people understanding that or knowing that, then, just on the surface, hey, it's a dip, buy the dip. Everybody knows to buy the dip. And that's how that's how the capitulation unfolds. People buy the dip, and then finally they can't take the pain anymore, and everybody sells. And that's how the parabolic spike ultimately comes unwound. And at some point, that's what we face.
We'll have more with Tim Cyclesman Wood right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, with the so-called bubble of everything, is there any way for somebody to keep track of what's going where? Do you have charts available with your newsletter that might keep people on top of this?
I do, and I have proxy indexes that I'm using. Like I said, monitoring the vital signs. There's always stuff that leads, things that lag. There's always, like I said, leading indicators, and something has to break first. And I track all of that. I have a gamut of things that I'm watching very, very closely. And like I said, you look at the structure in one, and it's kind of like the avalanche. You see the first pebble and then the next and the next and the next. So yes, there's things that we're watching very, very closely. And, I made a comment in my letter. I said I equate this to kind of like a landmine. Everything is okay until you step on that landmine, and all of a sudden things change very quickly. And that I really feel like is the environment we're in. Like right now, to use my friend's word again, everything feels hunky-dory. But when it changes, it's going to change. But yes, the answer to your question, we know what we're looking for, we know what we're watching, and we're watching it very closely. So as it develops, we'll see it in those charts.
Could you give us an example of what one of those charts would look like and what people can learn from it?
Well, it's market. When I say market structure, it's cyclical structure. It's hard to, I guess it's kind of hard to explain without seeing, but you have to have, it's like a foundation. You have to have the proper foundation for the market to go up, but you also have to have the proper foundation and footing for a turn to take hold and go down. And that's what the cyclical structure is all about. And until we get that structure in place for a footing for a turn, then this can just go on and on and on. And what I'm saying is that we're seeing, like in lumber, we're seeing some cracks. There is, and Bitcoin may have peaked. If I was pressed against the wall to give an answer, I would say that it probably has. Any advance from here is probably going to be a final gasp type move if the top's not already in place, because I see the structure. And so what I'm saying is one by one, you'll see the turn start to take place, and that's what we're looking for. And I think Bitcoin may have made the turn. Lumber may be in the process. As well.
Now, when we have all these different bubbles and people acting, you were saying what, irresponsibly, or is it they've been trained over the last, I guess, 10 years now since the last recession that, hey, everything's okay, and because of all the stimulus being forked out the door because of the pandemic, they feel this government help and stimulus checks are going to continue, forever?
I guess, and it's just the environment, it's the nature of the bubble. It's, whenever a man can't get enough high-end Rolex watches in his store to stock the shelves, whenever, you have 18-year-old kids becoming Bitcoin experts and that sort of thing. It's like the shoeshine boy in 1929. It's just the nature of the environment.
Now, how should we be acting right now? I remember some time ago you said cash is no embarrassment because at least you know where it is and you haven't lost anything.
Look, I'm still of that mindset. I mean, this thing, it's gone on so long, it's so stretched. I mean, is there more left in it? I don't know yet. But the thing of it is to be on the sideline is kind of like do no harm. I mean, at least you're safe and you can, preserve your assets. I'm not giving financial advice in any way. I'm just saying I would not want any exposure to this whatsoever. And if I did, I'd have a short leash on it. As my friend Kennedy Gamage used to say, it's time to dance very close to the door.
Now, when you're doing that, people are so worried that they're not going to make any money. And they say, well, if there's a problem with the market, I can always quickly sell. But, of course, selling means somebody has to buy. Who's going to buy a plunging stock or a plunging commodity?
Well, here's the problem with that. Number one, it's just like back in, we talked about this back in 2020, March and into April. And I think I may have told you a couple of times we've used this example, but when an ex-neighbor friend, she was talking, the woman was pretty distraught about it because they'd lost so much money, and she said, if it'll just get back. And on the way down you say, well, I can't sell now because it's going to bounce back. I can't get out now because it's going to bounce back. I can't get out now because it's going to bounce back. And then it gets down so low and they're like, well, if it'll just come back, once you get some sort of a little bottom, if it'll just get back. And so they hold, and now it's come back. And people are not going to get out. That's the average guy is going to be left holding the bag. That's the way it always works. And it's because they don't listen, they don't look at analysis, they don't understand the environment we're in, and they're going to be the ones ultimately screwed. It's the way it works.
Now, of course, what about cost averaging? You just put the same amount of money into your ETFs or whatever, and don't worry about whether they're going up or down each day. Is that a strategy that can work?
Well, of course it is in a normal environment where you have, but in a bubble environment, do you realize that in and I'm saying this from memory, I think I'm right, but from 1929 to break even for the market to get back to the 1929 top, from the 32 low to the 1920 back, for the market to climb back to the 29 highs is what I'm trying to say. If I remember right, it took 25 years. 25 years. So does the average 35 or 40-year-old have 25ve years to dollar cost average?
Or what about your person who's retired right now?
Exactly. Even the 70-year, the 50-year-old, the 60-year-old, exactly my point. And that's what I'm saying. People don't understand the environment we're in. They've been trained that every time it goes down, everything's okay. And, the Fed's going to come out with some stimulus. They're going to be able to hold this. Everything's good. Everything's good. Everything's good. They've been trained for at least the last 10 years to think that way. And I just don't think that's going to continue to work. I mean, I think we're getting to the point where when we get a crack, the potential for it to be disastrous is upon us.
And so all this fear about inflation and so on, all of a sudden it's going to become deflation, isn't it?
I think so. And I think this fear of inflation is going to be, like I said, it's a heavy burden for the so-called recovery to bear. I mean, you still don't have, we still have the same economic issues that we had before the collapse before the decline into the 2020 lows, the pre-COVID fiasco. But now we're struggling to get back economically just to those levels, but we're doing it with the increased burden of the higher prices with commodity prices, the higher prices of everything, the higher costs of just going to the grocery store, and then the unemployment. So the underlying environment, what I'm saying, the underlying environment has not changed. This has all been camouflaged by the higher prices, and it's keeping people optimistic. Everybody thinks, well, we're going back to normal. They're lifting the mask mandates. Everything's being good, everything. And I'm telling you, I don't see it that way. I think that, I don't know what's out there, but eventually this bubble has to come to an end, and I think that the structure will tell us whenever that is, and I don't think people will recognize it for what it is when that happens.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or would like to take a look at some of his charts, we can pass that information on to him by you going to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HouseStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.